The SPY is down 2 days in a row. Please say it ain't so. Is it time to move to Canada? I will let you know sometime in the middle of the video. What's going on, everybody? My name is Hamza Hamid. This is Hamid Trades. Welcome to my first ever technical analysis of the stock market. I've been wanting to do this for quite some time. As you can see, tickets to Toronto are $1,035. We're going to go over whether or not it's worth spending that money to get on over to Canada right now. Now, without further ado, let's get right into it. Wow, that introduction went pretty well. Went pretty well, if I might say so myself. Okay. All right. So now the first thing that I want to look at in regards to the technical analysis for the S&P 500, for the SPY, is a key Fibonacci retracement level of the most recent swing low to the most recent swing high, which was from December 3rd to December 27th. And as we can see, the 23.6 Fibonacci retracement level has been acting as a very key level of support and resistance as well. So now we have to see how the SPY acts essentially around 320, right? Because these numbers aren't exactly correct. You can't really, it's 323.80 over here, it's 307.13. You know, you got to deal with it sometimes. Anyway, 320 is a key psychological level for the SPY, and it's going to be very, very interesting to see how traders and the market act around these levels. If it doesn't break, that'll be a very good sign. It'll end up creating some sort of a flag formation, in my opinion. We're going to go into that soon, but it might break, to be honest, in my opinion. And if it does, we're going to look for a hold of the 38.2% Fibonacci retracement level. Now, if it holds that, again, we're still good. The 38.2 is still a valid area to hold for support. But once we start heading into the 315, 313, we can start seeing a strong move to the downside. Now, once that happens, we're going to see an increase in gold and silver, in my opinion. So we're going to see what happens. But currently, in my opinion, the SPY is trading in two main chart patterns at the moment. And we're going to go look at these right now. So the first one is, one second. Let's get back to these. Okay, here we go. So the SPY is trading very triangularly. It's not a word, but it's forming very, very strong triangles. So now what I want to look at with you guys here first is this triangle that formed all the way back in February of 2018. We've been in this formation since then. And what I want to look at specifically is, let me hide these real quick. What I want to look at specifically is the formation of this triangle. So now, as you can see, it's geared all the way from February 1st to now. And I want to show you guys the breakout target that I had based off of this triangle and how well it's been working. So the break of this triangle went exactly to 320, essentially, right? So as soon as it broke, based off of this triangle formation, the SPY was indicated to break up to 320. And as we know, it's broken that by a few dollars, right? Now, another key triangle formation that I wanted to look at was the most recent huge dip of late December into January, right? So now when you look at that, right, same triangle, just another flush down, and we're going to use the bottom level of the initial triangle, right, as the resistance level for this next one. So now if you get the flagpole, if you get the perpendicular line of the triangles, and then you put them to the breakout of that triangle, you get a new price target. This new price target was 300. So these triangles are pretty on point, and they are pretty accurate in regards to price targets and historical movements to the upside with breakouts. So again, to do this, you get the perpendicular line of the triangle, you clone it, and you put it straight onto the breakout point of where it first breaks out to the top of the triangle for the first resistance line. And then that's how you get the target. So as you can see, as we well know, the SPY has surpassed 300, and it has surpassed 320, right? Now, what I find most interesting about this pattern, as these two patterns have played out perfectly, is whether or not this third pattern is going to work out. So what I want to do is I want to make a line from this top resistance level all the way to the bottom, and let's see if we can't find a new price target for the SPY, a potential price target, which would be $338.78, right? Now, if that happens in the near term, that might be very, very unlikely, because I see precious metals and silver and gold doing very well in January, but we can wait and see. But the next price target for the SPY would be past 330. The initial one would be 338.78 based off of these triangle formations. I don't see that happening, but these two have played out perfectly. You know, it's good to know that the price target is there, but we'll see what happens. And yeah, you know, that's it for the SPY, really. It's trading very triangularly, as you know, I said earlier. It doesn't hold very, very well as it gets out of the Bollinger Bands, as it gets out of the upper deviation of the Bollinger Bands. The SPY doesn't hold very, very well. As you can see, it broke above it, and then it fell right back down. It broke above it, fell right back down. Broke above it. Recently, it's been doing pretty good. So, if anyone has been trading as like the break of the Bollinger Band, you would automatically go short. You lost a lot of money. So, it's good to see the formation and the movement end before you make a large short to the downside. So yeah, let's move to silver. Silver is very, very flaggy. So what I want to look at is specifically the various different flags of silver. So you can see there's a flag here, you can see there's a flag there, you can see there's one there, you can see there's an inverted one, a bearish flag over here, and then you can, you know, let me show you some fib retracement levels. 1 second. So we're gonna look at the fib retracement level from in July. So July, what I want to look at specifically are the fib retracement levels on the break of the Bollinger Bands and how long they specifically stay above the 68.2 level. So now the 68.2 level, as you can see, in my opinion, on a pullback of a breakout is very, very likely to be touched again, right? So now if you're buying options, after the initial close outside of silver, of the upper Bollinger Band, how long does it take for silver to touch the 61.8 level? So as you can see, it's took less than 2 weeks in this case of July 16th to July 24th. You can see that it took July 16th to July 24th, yeah, the move, it took within 2 weeks for it to retrace back to the 61.82 level, and then it ended up breaking below. So now I want to look at something else interesting as well. You get the level from August 26th to September 4th. You draw it from there to the top of the move, and you see that it not only touches the 61.8 level, it breaks below it, and it ends up giving back all of its gains. So what I'm looking at currently for this silver move is specifically what you have to look for is a complete open, a red open inside the Bollinger Bands, and then a close within it. And within 2 weeks usually of that happening, it touches the 61.8 level. So if you were to buy puts, you would be a very happy camper. If you were to buy puts right here in September 5th, following that same format and you bought puts to the downside to touch the 61.8 level, you would be a very happy camper. You could sell some of your position over here, let the rest ride out. You can sell some at the 50, you can sell some at the 61.8 level, and then you can have fun and see where the rest take you. But that has been working out very well for me. So now, specifically what I want to look for is, again, the same sort of move. So now, depending on how far of a percentage move, the move in July was 6%. Was a 6% move. The move in September, late August to September, was around 10%. So now it's going to be very interesting to see how much of a move silver makes out of closing from the Bollinger Band. And then we will look for a target to the downside, depending on when it closes into the Bollinger Band, and we're going to start putting it. So that's going to be very interesting as well. And so yeah, like, it's very important to look for flags on silver and precious metals in general. So now what I want to look at are some price targets based off of some time frames on silver. So now specifically what I want to look at is the weekly chart for SLV. Now, if that doesn't look like a flag, you gotta check your eyes, in my opinion. If that doesn't look like a huge flag to you guys, it looks like a flag to me. Hopefully everything works out for your guys' eyes. Anyway, weekly chart, May 28th to the top of September 3rd. Huge move, right? Huge move. And I want to look at the. I made a flag based off of that, and from that, I've gotten two main price targets with a general idea of where the price of silver and SLV can be in the future. So to get this price target, what you do is you get the size of the pole, right? You clone it and you drag it to the bottom of the bottom of the flag, and then you can also take it to the top of the flag. So you take it from the bottom of the flag, and you could also take it to the bottom of the flag. And another thing you can do is you can draw a line specifically of the size of the flag itself, and then you can have another target and put that at the break. So your first target, a very conservative target for silver at the moment, would be 1840. Now that is a pretty juicy target in my opinion. So now if you were to buy, like, I'm not going to say that it's going to happen very soon. I'm not sure when it's going to happen, but based off of these flag patterns, that would be the most conservative price target that you can put on silver currently, around 1840. The next target that I would be looking at would be at 2050. Now, I wouldn't necessarily even say that it's going to hit 2050 directly. It might even fall and bounce off of 20 because it's a key psychological level. Once silver hits 20, we're going to see some resistance, only because, you know, 20 is a huge number mentally for traders, and we can see that as a key level. And the next level is 2112. Now these levels are these drawings aren't completely done accurately, perfectly to the, you know, the 10th of the digit and everything, but it's there, and it looks pretty good. And in my opinion, if you're buying calls somewhere between 1850 to 2150 for, you know, a long term, it might be a very good investment in my opinion, because as we can see, we see these we see the break of this flag, and that is a very, very good sign. So yeah, you know, that's a very, very good sign. When you look at the daily chart, the daily chart even shows a better picture of these flags, because you can look at the various different charting patterns intraday, or not intraday, of the daily chart. Since this move has started, you can see it move to the downside, and you see a bearish flag form exactly perfectly, a bearish flag form, and you see that the target hit perfectly. Well, yeah, the target hit pretty darn close because the target was to 1537. Our low was 1544. So again, you know, it's not going to be down to the T, but if you hit it somewhere in the ballpark, it's pretty good in my opinion. So that's what we did recently. We made a bearish flag, and because we saw that precious metals and silver and gold and everything were trading in a flaggish formation, we saw this happen. We saw this form, and we saw this right there to the price target. That was I almost forgot what I was talking about for a second. Anyway, boom, that's that. And hopefully we can see a move here tomorrow. I would not be I wouldn't be surprised with this market. But yeah, we can see a move there for silver. So now let me look at GDX. GDX also huge flag. Just a huge flag right there. You can see it just on your screen. Let's look at this. Same thing. Same exact concept. You get the pole to the most recent high. You replicate that. You replicate that in size, and then you put it at the top of the breakout of the flag, and then you get your price targets. So now if you get the more conservative price target level of the size of the flag itself, you get up to 320 or 3254, right? And then again, 30 is going to be a key psychological level. Actually a really key, like a very strong sign that this actually had a very, very good day today, was that a key level of resistance was 2937. It blew by it and it closed above it, which is a very good sign for gold. So you can see it at 2949 right now. You get the size of this triangle, of this flag. You put it at the break of the move, and then you get that target of 3254. Now if you were to replicate that and put it at the bottom of the flag to get our second target, you would be at approximately 36, right? 3686. And then you can get your third target at 3845. Now, these moves, in my opinion, are not going to happen overnight. They're not going to happen anytime soon. They might not even happen, you know, in the coming weeks or months. All right, but these are targets, and usually in these formations, they pan out perfectly. If they don't, then you know what I'm saying. You gotta do what you gotta do. Anyway, you see this here. You see that the SPY is actually in a downturn, and when you look at the SPY and precious metals of you know, silver and gold, they work very inverted. So usually when the SPY is diving down, gold and silver usually shoot up, which is why there has been a recent breakout for both of these precious metals. Now that's something to be looking at, and hopefully it's something that will you know, everyone can see perfectly after this technical analysis that I've been doing for you guys. So now let me look at a fib retracement here that we can look at. Wow, that looks terrible. That is absolutely garbage. But it's okay. So as long as we can hold, I hope you guys can see this, but the 38.2 level of the recent fib retracement level is 2855. So I hope we don't test that in the near future. But you know, it's, you know, GDX is approaching oversold levels, you know, in the future, or in the most recent months, actually in the past few months, as it has touched oversold, overbought, it's sold off. You know, it's touched it here, sold off, touched it here, sold off, huge, right? And then once it's sold off below the 50 level for the RSI, it's you know, it's been testing the 50 level, and we just recently finally broke out of the 50 level, which is why we're retesting oversold positions at the 70. So hopefully we can see what happens there. The 50 moving average for the GDX is holding pretty nicely. That's a very key support level, and anything below it was usually a very good buy. until this rectangular formation here. So yeah, you know, that's basically it for today's video. I hope you guys really enjoyed it. I hope you guys liked it. Again, this is my first video. I tried to take it in one take. I didn't try. I actually took it in one take. Sorry. And if you guys like the video, please like, comment, subscribe. If you made it to the end of this video, you mean a lot to me, and I really hope that we can continue this journey, because I love technical analysis. I love charts. I love looking at things. And if you guys are interested in me looking at something else for you guys, if you guys want me to do some analysis on a different stock, on anything else, please comment below. Please like, share, subscribe this video. Subscribe to the channel. Please share it with your mother. Please share it with your father. Please share it with your family members. You know, it's a pretty good skill to have, learning how to trade stocks and equities. And yeah, I will catch you guys later. It's been a blast. Thank you so much.